Welcome to today's Morning Report on Thursday, 4th of August, with me, Richard Perry, market analyst at Asset Markets. We've got a fairly sort of neutralish start to the day, nothing too significant in terms of direction. You've got the equity markets, which are sort of mixed to mildly higher. FTSE is an underperformer, interestingly, ahead of the Bank of England. Bank of England has its Super Thursday at 12 o'clock today. Super Thursday being monetary policy, Bank of England meeting minutes, and also the quarterly inflation report all released today. So subsequently there is expected to be a lot of movement around that, not only because of the fact that the market is expecting a rate cut. The first rate cut from the Bank of England since 2009 is the expectation there, 25 basis points. There's a bit of a dollar move, just before I get into that, there's a bit of a dollar strengthening that we've seen today. A bit of a rebound actually in dollar yesterday. Came after sort of on the back of mildly better data. The ADP number was mildly better ahead of expectations, although the ISM non-manufacturing PMI was just a little bit under expectations. It was still pretty solid actually at 55.0, so market took that as a pretty strong move actually. And subsequently the dollar has rebounded, and that rebound has continued into today, and that is being seen pretty much across the euro, sterling, and also the yen. But generally speaking, I think the market is pretty much getting ready for the Bank of England Treasury yields, for example, basically flat, mildly up on the 10-year, but yeah, basically flat, and helping to support the dollar. But yeah, I think the sterling move is the key factor that we've got to look forward to today. Can the Bank of England meet expectations? I think 25 basis point cut is pretty much a given, and on top of that, will it drive dovish language? Will it sort of go aggressive in its easing rhetoric? Will it sort of engage potentially even quantitative easing? Market's not expecting quantitative easing, but will it make that move? Now, in terms of what the market is expecting, here we see the economic calendar from Reuters. One unchanged, that's presumably going to, Reuters believes that's going to be Ian McCafferty, but then 8 voting for a rate cut, which is interesting. No increase in quantitative easing, but a 25 basis point rate cut is the expectation across the board. So it could well be down to how dovish the rhetoric is from Mark Carney today, and what sort of slashes they make to the growth forecast in light of those pretty worrying PMI numbers that we've seen this week. In terms of the rest of the economic data today, we've got the jobless claims for the States, 265, basically in line with last week, 266, and also the factory orders at 3 o'clock. Factory orders expected to be minus 1.8, again negative on the month, again sort of disappointing, showing negativity through the factory sector. So it certainly isn't all that positive on that side of the economy for the States. So that takes me to my chart of the day, which is the Kiwi dollar today. Now, the Kiwi dollar has been in this big uptrend channel, basically for the past year. Broke out, but struggled to hold on to the breakout, and it sort of pulls back inside. Now, the question is, basically, if you look at the Kiwi dollar, it sort of has 2 week moves. That was only a couple of days, but generally two or so week moves where it has bull move and a bear move, and we've had the latest bull move and again a corrective candle yesterday. Now that's come as the market or the RSI is starting to form lower highs, and also the MACD line's turning over, and that despite the fact that we had a higher high with that run higher in July. So there are question marks, I think, as to the sustainability of this run higher just for the near term, and I think that the fact that we've had another corrective candle yesterday, you've got these momentum indicators that are a little bit sort of underwhelming really. The RSI turning back from 60 on the daily, and the fact that yesterday's candle completely unwound the bull candle on Wednesday and also took us below Tuesday's low as well. So that suggests it's sort of turning around more. And if you look on the hourly chart, you've seen a breakdown, 7160 area as the basis of support. That sort of got broken down, and we're sort of now into a bit more of a corrective configuration really. If you look on the momentum indicators on the hourly. RSI, which consistently was forming support above 40, broke to 30 yesterday. Similar story on the MACD lines, consistently finding support above neutral, but then went negative yesterday. So it would suggest that there's more of a sort of a concerned outlook, I think. You could also argue, let me just see what we do on the trend. Come on, don't freeze. Okay, well, okay, here we go. You're actually, well, fairly much on that uptrend at the moment, so it's interesting. But yeah, it is testing this positive outlook on the dollar, on the Kiwi dollar. And having broken below that reaction low of 71.60, I think that sort of changes the mindset a little bit, and that's sort of reflective in the hourly moving averages and MACD lines, which are moving averages to beginning to roll over. I think a drift back into the support band, sort of 71.20 back towards 70.60, I think could easily be seen as 70.60 again, a pivot line. Throughout late July, and I think you could see a drift back towards that, and that would be fairly consistent with this sort of rangy phase that we've seen for the last couple of months, 2.5 months, sort of a continuation of this sort of bull-bear run. We've had the bull run, and it could start to see a bit of a corrective move again. So you've got the big key resistance that comes in at 72.55 now. So few interesting moves that we've seen on the Kiwi dollar, which is starting to reflect the sort of the marginal return of dollar strength. But it'll be interesting to see how this one moves. So I wish you good luck in your trading on the Kiwi dollar today, and I'll speak to you later. Thank you.